So tell us what's on the minds of shareholders.
Because, we just had earnings a few weeks ago. So this will kind of be what's new. Is there anything, maybe a general update on the business conditions? I think we were just talking about Amazon. Any update that we can get on the e-commerce industry is something that investors and analysts will be focused on. We have a 3-hour shareholders meeting on Friday and a Q&A with the CEO, Doug McMillon. Interesting, we have a chart here, GTV Go, looking at Amazon versus Walmart, because so often we compare the two. Amazon's market cap certainly tops Walmart, but on a revenue basis, Walmart is just crushing it. Walmart is just a staple where people go, they buy, and you can see there it's at the bottom of the chart in the white line is Walmart revenue. Now, interestingly enough, online sales still only about 5% of their total revenue, but online sales growth growing 40% versus the brick and mortar stores only growing about 2 to 3%. So working on making some progress there with the online space.
That's revenue. What about margin?
Yeah, margins are interesting because they're getting a little bit squeezed. So it's really funny when I'm speaking to analysts down there, there's a bull and a bear case. And the bull case is if the company looks good, you're seeing revenue growth. The bear case is at what cost? And margins are being pressured, that EBIT margin. They don't see profitability in the U.S. e-commerce site. So to the extent that they can start growing margins, but analysts say they're not going to see gross margin expansions because of the investment that they want to put into the digital transformation. That costs money.
Well, I find that interesting too, because you're willing to buy Amazon stock without the profitability for the growth, but are you willing to buy Walmart stock for the growth and not the profitability? Because they'd have to grow so much in order to make that up.
And the share price has been, I think, reflecting that. The share price has been falling a little bit, and I think a lot of that as well had to do with the Flipkart deal in India, where it was a big push for them, but it came at a cost of 60 cents on earnings per share basis. So analysts were wondering, had they overpaid for that or not?